Why this podcast and why now? About 9 months ago, Michael and I sat down with a local marketing guru to discuss brand building in an industry that is built on regulation and privacy. He told us a story about his first job, where he built a following for a tech company by writing a general tech blog that grew his following without focusing at all on the specifics of his own company. Yesterday's blogs are today's podcasts, and so an idea was hatched.
Our goal with these podcasts is not to sell you products. It's not to provide investment advice. It's true that these two things are what we do most of the time, but not here. On these podcasts, we just want to talk about business in Israel with some of the people who have figured it out and have influence in the local market. We hope these conversations get you thinking about your own business and reinforces for you the vibrant and innovative nature of the local business scene. And remember, nothing we say should be taken as any sort of advice.
And so here we go. No suits, no ties, no questions left unasked. Conversations with local legends. This is Market Makers IL. Let's roll.
So Karen, how funny is that? We both initially made Aliyah from Europe. And today we're in Modi'in to talk about, very interesting things. And we meet every, week, I would say, in the neighborhood between Neve Tzedek and Florentine. So that's all. That's Israel, I would say, and that's kind of funny, and that's kind of like what we love about Israel is this kind of journey that we've gone through, right? Very small world, very small country, and big things happening. This is pretty cool.
Yeah, I agree with you, and thank you for having me today. It's really a pleasure to be here and to start our day together. And I totally agree with you. I mean, our neighborhoods, our lifestyle here in Israel, it's such a blessing because we have this huge melting pot of people coming from all over the world, right? And in the same time, our kids are getting, we just discussed it earlier, the Israeli mindset. And I love that. They're so creative and open-minded. Sure. And I think it's a real blessing to have them here in Israel.
Absolutely.
Well, that's great. A great intro, I think, to how we wanted to direct what we're going to speak about today. And I'll do a quick introduction here. Karen Schwock is our first official guest to this endeavor that Michael and I have started up here for EFG. Karen's the founder and CEO of Lucid Investments, a multifamily office based in Tel Aviv since 2018. Before setting up her own shop in 2011, Karen set up successfully Pictet Wealth Management in Israel. She also sits on boards and investment committee of several equity funds. She's got 23 years of experience in family wealth management and partners with her clients to protect and increase their wealth through her approach to financial planning and wealth management. And my first comment is, I'm glad we're not competing with you.
Oh, that's so nice of you. Thank you.
What I really found interesting, and I'll start with this, is I love your tagline on your website, which is money doesn't come with instructions. And it reminds me of something that the head of institutional sales at a prior employer used to say to us when the sales force bothered him about dress codes. He used to say, there's no such thing as managing client money casually. And so you've got vast experience with emotions and expectations that do come with money. Maybe we can start a conversation with how you settle on the tagline and what that really means to you.
Well, I think managing money is an ongoing journey because you first start by accumulating your wealth or inherit your wealth. And then it's a process to get to know not only the financial aspect of it, but also to focus on what is the purpose of this money for you. And it's very clear that nowadays we, as a professional, we speak about family-oriented goals, right? And I think it's not about accumulating such a sum of money, but okay, I would like to be able to provide for my kids up until they are 18. I would like them to attend certain type of universities. I would like to be able to maybe help them to purchase the first apartment. So all in all, I think it makes it so much more important to help people achieve their goals. And it's a process, an ongoing process. And even if we think about the risk profile of clients, it evolves over time. Sometimes we start working with clients and they tell us, well, I'm a conservative client. And over the years, you realize that
I want a
when
20% return, but I'm very conservative.
Yeah, right? No, but more than that, I think because most of them are quite young and they realize that they understand the trends and they understand what's going on. And they understand that statistically, if they increase their equity exposure, it would generate more revenues at the end. I think
they want to enjoy the ride. They want to be part of the equity ride, actually, as well. They don't want to miss it as well.
Right. So for me, I think that was the main goal of establishing Lucid, to be able to help people achieve their goal, to analyze trends, to also be able to see if there are some anomalies in the market and to be able to discuss it with them with the clients before they happen and have they impact on their portfolios.
Excellent. So why don't we step back for a second and maybe you tell us about your professional background and about your journey in wealth management, how it started and how you got here today.
Sure. So, well, as you said earlier, I arrived to Israel in 1997. I grew up in France, in Paris. And when I arrived to Israel, I was very keen to analyze trends and market figures. And I started as an analyst, but very rapidly, I realized I was even more interested in making decision upon these trends and upon this analysis. And therefore, I switched to wealth management. And I'm happy, actually. I had the opportunity to check other type of roles in the industry because I know nowadays I really love our expertise. And I think wealth management has a very specific combination of skills, right? And for me, it's the type of profession or the type of role I'm willing to have in the industry. So getting back into your question, I think my journey really took shape when I joined Pictet Company back in 2011, 2012. Pictet Company, for those who are not maybe familiar with the bank, is nowadays one of the leading bank in Switzerland, managing over 710 billion of asset under management. And what started actually back then as, a decision to just establish an operation for regulatory purposes soon evolved into something really, really impressive because we saw the growth potential. We saw the business development potential. And serving as their CEO as 6 years, I really had the opportunity to see this venture evolving and growing. And it was really, really nice to see this operation growing and that with a tiny team of advisors, we were able not only to enlist clients, but also to provide, wealth management services. And then, as you said, in 2018, I decided to take the leap, right? And to establish Lucid Investment, which is a multi-family office based here in Israel. And for me, it was actually a natural path to follow. It was the continuation of what I've been doing as a private banker. I think what was very important for me when I established Lucid was first to be in complete alignment in terms of interest with our investors, which sometimes could be difficult when you're a private banker and you have, some constraints from the bank or some revenue targeted targets that are, quite often in our industry. And also I wanted to be able to provide a service that would be maybe more flexible. So that I would be more able to provide a proactive investment strategy to our investors. And all in all, I think we bring something very unique as a boutique firm, right? We are a boutique firm at the end to certain type of clients who are interested in having this type of services. Yeah.
You mentioned you came to Israel in 1997, and if my memory is correct, that's about the time that Swiss banks officially opened offices in Israel, 97, 98. One of the big ones was here about then. What do you think the evolution of Swiss banking has been in the minds of the Israeli customer? What's been attractive? How has that shifted? And how do you see those trends developing over time?
Well, I think there's two aspects in your question. First and foremost, we have to speak about the Swiss bank, why they decided to actually have an operation in Israel. And I think in that perspective, when we're carefully analyzing what Swiss bank have been doing over the years, is they were trying first and foremost to find high growth potential, but at the same time, they were willing to establish in very stable economies, right? And in that perspective, I think Israel checked the box. And if we think about the growth potential, I remember when I started at Pictet, back in 2012, there were, I think, if I'm not mistaken, 8,500 high net worth individuals in Israel. And over the decade, we had additional, I think, more than 10,000, right? And it was due to two main things. First, as we Israeli most probably know, we had a strong evolution in the tech ecosystem, meaning that a lot of tech entrepreneurs, executive, and other business leaders accumulated significant wealth. But also what we've seen is that Israel became one of the top destination of millionaire immigration. And that's also something we have to put some emphasis on, right? And I think for Swiss Bank, it was an extra layer of growth potential because they didn't expect all this immigration to happen in Israel. And I think if we're thinking about what is Israel as a market in terms of growth perspective, I think it's first a getaway to the Jewish community worldwide. And also because many Israelis are relocating, it was also an opportunity to tap into a new sector they were not familiarized with, right? Because traditionally they were targeting other type of sectors or industries in Europe. And now because of all these tech guys, it was the opportunity to tap into this very rapidly evolving industry. So I think it was very interesting for them. And another factor I think was also very appealing to Swiss Bank is the fact that Israel is an onshore market, meaning that it was very easy to find the origin of the funds. And that is very important for Swiss Bank in order to feel comfortable with the clients they're enlisting. And in that perspective, I think Israel was really checking all the boxes. So that's on the bank side,
That's
right?
the bank side. That's the part that we hope to take advantage of as well.
Of course. And I think from the clients or the investor perspective, I think Switzerland was, obviously it's one of the top hubs in terms of wealth management. Worldwide, it accounts around 30% of, the global wealth management activity. And there's several reasons as well. First, Switzerland is a very stable country with political neutrality. And moreover, if we're focusing on the Swiss private banks, I think what's very interesting that they are very stable. And that's actually what high net worth individuals are looking for, very safe custodian banks. So if we're thinking about, let's say, one of the parameters that we are interested in as investor is the core tier ratio, right? And if we're thinking about the core tier ratio of Swiss private banks, and I'm not comparing it to commercial banks, right? But Pictet, for instance, it's above 28%. And it's so much higher than the 12% that the regulator, the FINMA, right, is actually demanding from these banks. So obviously it's appealing for Israeli investor. And then, I think in terms of investment as well, Swiss Bank also might have an advantage in comparison to other type of banks. In a way, and now I can compare it because I'm working with a lot of banks, Swiss Bank have traditionally an open architecture, and that's very unique. And it means that investors are able to select the type of products they're interested in. In comparison, when you're an Israeli client and you're working with an American bank, for instance, as a non-US person, sometimes you're not allowed to select your own type of products. And that's, I think, an advantage for certain type of investor, especially those who are interested in alternative funds or structured products or, all these type of unique tailor-made solutions. And I think it's also appealing to Israeli investors.
It sounds like what you're saying, if I'm not mistaken, is the country appeals to the inherent risk that Israelis feel, and so they're taking a little bit of risk off the table. And it also appeals to the freedom that Israelis are looking for when it comes to decision-making. Mm-hmm. And so it offers that kind of perfect convergence of opportunities for the client.
Yeah, I agree. I think Switzerland, and more specifically Swiss Bank, have a lot to offer to Israeli investor. That's for sure.
So now there's a match between Swiss banks, Israeli clients. We have a match. Okay. So what is, from your perspective now, given the challenges that Israelis have faced over the last, obviously, couple of years, what strategies would you recommend to clients looking to build resilient investment portfolio, during the ongoing uncertainty, locally, globally,
Well, objectively, yeah, the last few years were very challenging in Israel. The ongoing war, the judicial reform, and a lot of clients actually hesitating whether or not to enhance their allocation abroad. That's for sure. But I think if we're thinking about the trends that happened over the last 2 decades or last decade, we have to remember that Israeli tend to be very strong. They tend to have a very strong home bias. And that's very, and if you pay attention, for instance, to all the institutional assets allocation over the years, it increased dramatically overseas. If you remember the Provident Fund or the insurance company's asset allocation a decade ago, it was really highly focused in Israel. And the challenge with that is that first, our capital market are very limited. If you want to buy, let's say, a bond in Israel, sometimes it will be a challenge because you don't have enough volume, right? Yeah. Or sometimes it's very focused on certain type of industries. And if you want the exposure to the Israeli market, actually, you should actually go and seek it, in the Nasdaq or the S&P, because that's where a lot of companies are listing their shares. So I think most Israeli understood this trend a while ago, and they have started, but progressively, to increase their allocation to global assets. And if you think about the figures, only 0.2%, we discussed it earlier, 0.2% of the MSCI World Index, which is the leading index for equities, derives from Israel. So if you want to mitigate your risk, logically, you will increase your exposure globally. And if we focus even more on wealth management for private clients, I think we had 2 other trends that happened. First, a lot of Israelis were open to the idea to relocate. And therefore, when they were thinking about relocating, for them, it made sense. Well, okay, if I'm relocating to the US, it would make sense to have some of my funds abroad and to manage it in a different way. And moreover, if some of them sold their company, because we discussed it, a lot of them are coming from the tech ecosystem, either in the public market or through secondary funds. They received the funds in US denominated, in dollars or in pound or in euro. And therefore, it makes sense for them. It was the natural path to follow to invest it into US denominated products, investment products. So I think all in all, if we see this trend, evolving over the years, it makes sense that Israeli are actually diversifying their portfolio. It makes sense, financially speaking, but it's also coherent due to all these various trends we've been experiencing here in Israel.
So just on that, okay, now the Israeli investors have diversified away. They've got US dollars, they've got euros, they've got all types of investments. But how do their own preferences differ from the global trends? For example, I don't know, French private clients like to, save money and be conservative, for example. Americans like equities. So how's your feeling about the Israeli clients who now work, more globally? What kind of investments are they going through? What kind of preferences do they have?
Well, let's start by saying that most Israeli tech entrepreneurs have accumulated very early in life their funds, and therefore, as they are very active, in their operational business, some of them, in my experience at least, some of them are willing to be very much involved in the management of their funds and actively managing their funds. And for us, I think it's a huge challenge because they challenge us to be more proactive, to build a strong asset allocation, but sometimes to have a tactical way to handle things. And I think for me, the biggest challenge with Israeli investor is the fact that how to help them to manage their assets, taking into account all the liquidity needs, because sometimes they accumulated a significant, wealth, but then they are eager to invest in other early stage companies in their industry, or they are willing to add it in additional funding rounds, right? Significant funds, but they need the liquidity for that. And the challenge for me, at least over the years, was to help them, in one hand, to reduce the exposure to one specific asset, generally the company they're working for, or the industry they're working in, and to be able to capitalize on specific market trends. And generally when, you have undervalued stocks or products, and to invest back into these products. And in the same time, to help them leave significant asset in liquid assets, and not necessarily to have a huge portfolio invested in only non-liquid asset, because it helps them to mitigate the risk, to be more proactive as they want to be. So in my perspective, that's very unique in Israel, and it's a redundant theme. I don't know, you guys, if you face the same type of problems as we do, but I think that's definitely one of the challenge we face.
Definitely, I think it's a very important point, and for us as wealth managers, I think the idea of educating the clients on financial markets, on the liquid markets, versus the area that they know better, which is the startup companies, the tech companies, the private companies evolving, like in early stage, mid stage. And this diversification and risk management is some kind of thing that people sometimes need some education. And that's also why we're here for it, to kind of like help them a little bit with a little bit more direction,
right,
and diversification and all these kind of things. Because sometimes the risk, the understanding of the risk level is not always accurate from the investor perspective.
I think, I think they understand it. I mean, they're really smart guys, right? They understand it, but emotionally, I think it's difficult for them. And that's why I think it's important to involve a professional, because we help them to analyze it on both levels, and to help them progressively accept the fact that you can do a lot of things with liquid assets, right?
What's interesting about where this has been going right now is that I think one of the things that defines Israel right now is that you see a lot of first generation wealth. A lot of these tech entrepreneurs that you're dealing with did not come from wealthy homes. And all of a sudden, they are considered by almost any standard ultra high net worth individuals. And I'm hoping you can kind of walk us through how that perception or how that attitude towards money changes, and then maybe layer it into one of the biggest trends we keep hearing about and we've kind of discussed. And that's the wealth transfer as these entrepreneurs age from the boomers to the zoomers, as they say outside of Israel, and how that's impacting kind of the local market.
Well, the wealth transmission is definitely one of the key elements we are all dealing with. And it's funny because, recently I was in the US, in Florida, and I had the opportunity to talk to colleagues, who are wealth manager and family officers. And we were comparing, the type of problems we're facing. And it was interesting because they were actually focusing on Latin America and Europe. And they were dealing with the transmission of wealth in families with 7, sometimes 8 generation. And then, wow, it's such a headache because, it's a lot of person to take into account. They don't necessarily live in the same countries any longer. They don't necessarily share the same family values any longer. And here in Israel, I think it's much easier. It's much easier because we're dealing with first generation, second generation, third generation, but that's it. So it makes it so much easier. And for us as professionals, especially because we don't have inheritance tax, we don't have gift tax in Israel. We're both French, so we know that in most European countries.
Don't make fun of the American in the room.
No, but no, I'm not. That's for sure. But it's such an easier way to transmit wealth, and it makes it also easier for the parents to decide when they want to transmit the wealth. So I think that's very unique to the Israeli jurisdiction.
Yeah.
And also in terms of the asset structure, we discussed it just a minute ago. It's easier to transmit assets when it's liquid assets because you sold your company. Sure. So generally it goes to, companies that, sometimes are liquid, and it's not like the type of super complex situation where you have a family business that been, there for 100 of years, and then one of the kids is willing to be involved, the other one it doesn't want to be involved. So it makes it so much easier, I think, in terms of transmission. And maybe another element which is a bit different, I think we discussed it about the education of the kids, but we are actually having a very strong entrepreneurial mindset in Israel, a very strong, people are educated. I think maybe because of the tension we had in Israel, maybe even more resilient than in other parts of the world.
For sure.
And I think people are actually encouraging their kids to take risks and to start something new. And in that perspective, we don't have the type of gap we can see between boomers and millennials that we can see in other countries, because the kids are actually encouraged by their parents to take the lead and to manage the wealth of the family. So I think because of all these parameters, the transmission of the wealth is, I would say generally, because obviously you cannot stereotype everything, but generally speaking, I think it can be easier than in other countries.
Interesting. So let's talk about women in business for a second.
Ooh, that's a very serious topic.
And I'd love to hear how you're thinking about it. Obviously, even in this room, you're a minority, but the ratio here is actually much better than it's probably been in a lot of rooms you've been in over the course of your career. And one of the big trends, and it's probably true globally, more than 50% of most higher degrees are now women. And that goes to every single field. And that means the people who are going to be making more money, who are going to understand money, are going to be women. And how do you, just your perspective on that whole trend and your experiences would be really interesting.
Well, that's true that our industry has shifted dramatically over the last 2 decades or 3 decades. I remember when I started at Pictet, we were 4 women out of 200 in the executive team. But I think it was very interesting because I think we brought over to the table other type of skills that were very complementary to our colleagues. And it helped us to understand that, okay, maybe if we're focusing on our clients, we should not stereotype either women. Because if you think about an 80-year-old woman who just inherited funds from her late husband and doesn't have any financial background, and she's risk averse, and she doesn't have, specific needs except that, ending her life, in the way that she used to have, comfortably, yeah. And on the opposite, you will find, 50-year-old female founder who has a very strong experience, a very solid background in finance, maybe more keen to invest in higher type of portfolio, higher risk profile, and she might has some completely other type of background. And therefore, when I think about women, and we discussed it earlier, I think that we should focus about not see them as a monolith, group. I think we should actually see that as an opportunity to see that most women tend to have family-oriented goals and help them to achieve their goals. As we discussed earlier, I think they are willing to be able to provide for their kids. I think they are willing to be able to help them attend the best universities, to purchase their new house. And in that perspective, it doesn't matter if we're female or male, professionals. I think we should definitely develop our EQ in that perspective and to be receptive to the type of messages they are sending us. Because if we read between the lines, we will understand in a better way what are these family-oriented goals they're willing to achieve.
I always tell our team, everybody in banking knows what KYC is, know your customer. Mm-hmm. And there's a tendency to say, well, that's this regulatory slog that we have to go through. But I think what you're saying is knowing your customer at its core is knowing your customer.
Totally. And, I think also because we have the opportunity to work with people, some of my clients, I know them for years. So it's a unique opportunity to see them, how they are thinking, what's the interaction with their kids, with their siblings, with their professional partners. There's a lot of interaction. And when you learn what were the experience this person endured or experienced and were positive one, I think you can better serve them.
Absolutely.
Karen, you've been in the industry for over 2 decades, so you've seen a lot of things, a lot of cycles. Let's look forward now. What are your expectations for 2025?
Well, 2025 objectively started very positively. If we're paying attention to the macroeconomic indicators, we're quite good. Mm-hmm. The GDP growth was really okay. Inflation is still healthy, even though we're all of us, I think, a bit afraid of the implication of all the tariff the US is intending to promote. But all in all, if you're thinking about growth perspective, inflation, employment data, and combining that to, we're in the middle of the financial statements seasons. And honestly, for the time being, it's been very well. I mean, profits were up 7.6% in average, which is quite significant, outpacing, all the analyst expectations. So I think all in all, it should be a positive year. Nevertheless, it's been a long cycle, so we should expect some volatility, especially if we're thinking about the multiples in the markets. I think we have to pay attention to the fact that the multiple, for instance, in the S&P is relatively high, but it's due also to the fact that we have 10 companies or 10 big companies that are growth driven, right? And generally having a higher multiple, and they represent already 36% of the market cap. And on the other hand, if we're thinking about all the traditional industries, there the PE multiples are quite okay. 14, 15, it's still, historically speaking, not that high. And I think one of the main challenge for us is to analyze how AI will impact all these companies, because the implementation of AI is very progressive. And for the time being, it was not really implemented. So I don't know how long it will take, whether it will be 6 months, 12 months, 2 years, we have no clue. But what will be the implication, not only on these mega companies, tech companies, but also on the traditional one, because it could help them generate more revenue and reduce their expenses. So I'm not sure that's your expertise, right? How do we model all this in order to provide an accurate analysis of what we expect from specific traditional companies in the year ahead?
Well, I, for one, am just glad that you managed to turn the conversation towards AI. So thank you for that. I didn't think you were allowed to have a conversation without AI. And we've spoken to somebody recently who thinks, who's heard somebody else, so this is now third hand, say that within the next 5 years, a significant portion of the world will be living on government benefits because they won't need to work anymore because of AI. Mm-hmm. I'm not so sure, but let's see where that takes us.
Karen, we're almost reaching the end of our podcast already. And we usually like to end the podcast with some quick, fire questions. Mm-hmm. So if you're up for it, we got a couple of them for you. Okay. Let's start with an easy one. Okay. What's your go-to Israeli junk food or restaurant?
Israeli restaurant.
There's so many. It's a difficult one. I know we're both from Tel Aviv, and the list is very long. And
maybe hummus.
Yeah,
hummus.
Keep it simple.
Keep it simple.
I agree.
I wasn't expecting this type of question,
Going back to business, maybe another relatively easy one. Who is your personal business icon? Doesn't have to be one person, but really somebody who's...
I think one of the books I've been reading over the last 2 years who made a huge impact on me was Ray Dalio's one. Mm-hmm. And it's always in the back of my mind because I'm always afraid that there's a huge anomaly in the market that we didn't analyze properly. And, what we've been witnessing in the US, for instance, for the last few years, this debt to GDP ratio just increasing so dramatically. Is it sustainable? For me, that's one of the challenges, to see how things will be evolving over the next few years, and whether or not the US will maintain, its leadership as it used to be up until now.
Right, and that's how it relates to the beginning of our conversation when you said you started as an analyst. So the analytical side of things is important to you. So I understand now, of course, when you look at the...
But for me, one important part of our profession is to be humble enough and know that we cannot analyze everything and we cannot know in advance anything. So...
That's for sure.
One of my mentors used to say, be right with integrity and be wrong with humility.
Right. And that's why I'm always thinking, what am I forgetting? What am I omitting in my analysis? how can we especially protect the assets? It's not about only growth perspective. It's also about mitigating risks. And we know that over the last few years, geographical tension increased. We know that, there's so many aspects that evolved and that we don't know how to analyze properly. It's very challenging to put everything into a model and try to analyze this. So for me, I think that's the main issue. I'm really interested into understanding properly. Yeah.
Interesting. Your worst career advice?
I remember when I was young that people told me, you should know in advance what your path will be, and you should follow, the various steps. And today I can tell you that no, I'm so fortunate because I tried so many things, because I gained so much different skill set, because I had to experience a lot of different people from a lot of countries. I've been in Switzerland, I've been here, I've been, traveling and getting to know a lot of various type of person. I think from every person I learned something,
Absolutely.
And for me, it's a blessing. I think we should not focus on what we've been told. We should experience things.
I couldn't agree more. Okay, last one.
Yeah.
What is the last thing or one of the last things you changed your mind about?
I changed my mind about?
Could be anything from restaurant reservation to asset allocation or
Asset allocation.
or anything you can think about.
Well, I think maybe in a way, I've been experiencing over the 2.5 decades, a lot of different investment strategy. And the bottom line is that I realized that to be a passive one is actually the most appropriate one. In my personal portfolio, I've been trying, to be active and to buy and sell. And at the end, I'm not sure that if I would have invest all the way in the S&P, my performance wouldn't have been better over the years, because I spent certain period of time in cash because I want to be able, to act upon it.
Right.
And at the end, I think that's the best thing an investor could do, to stay passive and not to be impacted by the wheel to do better than the market.
Yeah. There's no such thing as time in the market as opposed to timing the market.
Right.
What a great way to end a wealth management focused podcast. Thank you very much, Karen.
Thank you.